Should you buy Ford stock? Ford has been around for almost 120 years. Last year, the company sold 4.2 million cars, which puts it number 6 in the world in terms of cars sold. At a price of $12.50, the market cap of Ford is $50 billion. With $25 billion of cash and $19 billion of debt, the company has an enterprise value of roughly $44 billion, although the figure is slightly skewed by Ford's significant financing and leasing activities. And interest expenses mean the company is not GAAP profitable, with minus $2 billion of net income in 2022 and negative earnings per share. That said, Ford's recent performance has been improving. Revenue grew by 16% to $158 billion in 2022. At the same time, the selling, general and administrative expenses decreased from $11.9 billion to $10.9 billion, taking operating margin from 3.3% in 2021 to 4%. This is impressive considering Ford reported a negative operating margin of 3.5% in 2020 on much lower revenues of $127 billion. Although the company performed well in 2022, sentiment hasn't shifted significantly, with the share price up only 17% over the last 5 years. Include dividends, however, and the return is 55%, which is just a bit lower than the S&P 500. Historically, automakers have been notoriously risky investments due to the cyclical nature of the industry and the slim profit margins of products. The rise of electric vehicles means the high level of competition in the industry is only going to continue, and recent data suggests a likely reduction in spending power amongst consumers. One of the main challenges that Ford is facing is a low gross margin of 11%, which leads on to a low operating margin. Such a low margin doesn't provide much room for discounts and price cuts, something that other companies such as Tesla have been doing to increase market share. However, Ford does produce in-demand products. The Ford F-Series has been America's best-selling truck 46 years in a row, and Ford's 150 Lightning has been America's best-selling EV truck since launch. Overall, Ford appears to be making progress and the stock provides an attractive dividend for investors. However, the company operates in a difficult industry, has high costs, as well as entrenched issues with labor unions. The next year or so may be tricky for Ford as higher interest rates make auto loans more expensive and consumers cut back on discretionary spending. For these reasons, I give the stock a neutral rating, but these are my personal opinions, not financial advice, and I've got no position in Ford stock. For more detailed investing ideas, visit our website overlookedalpha.com.